An email from the International Energy Agency popped into my inbox this morning, and it's the kind of information that the Canadian oil and gas industry ought to take a good long look at, as well as the governments that are supporting expanded LNG production in Canada. But of course, they won't. So, may I suggest that if you're, interested, you can email, call, write a letter to your MLA or member of Parliament and share some of this information, share the video, because it's a bit eye-opening. So let's start off. I'm going to read an excerpt from the email, and then we'll get into the data. So here's what it says. Markets remain tight today, yet in the coming years, the global natural gas market is poised to transition to a period of abundant supply, largely due to a record wave of expected new capacity to produce and export LNG. This equates to adding around half of the total global LNG market today. A capacity increase of this scale would have significant implications for global gas markets. So, how much LNG are we actually talking about? So, according to the International Energy Agency, and this graph comes from that email I was telling you about. The current consumption of LNG globally is about 600 billion cubic meters. And as you can see from this chart, from this graph, we're going to add about 25 or 30 billion cubic meters of liquefaction capacity in 2025. But look what happens starting in 2026, and then accelerates right out to 2029, and then increases a little bit more in 2030. It adds a whole another 300 billion cubic meters of capacity. I mean, that's extraordinary growth by anyone's metric. Now, let's have a look at what the IEA has modeled for LNG trade, LNG sales overseas and consumption. This graph comes from the International Energy Agency's World Energy Outlook 2024. Just as an aside, 2025 is coming out in a couple of weeks, so watch for that. So take a look at the peak in 2030 at about, over 800. But we'll call it 900, because I think this modeling underestimated 2030 demand a little bit. Look at the difference between the step scenario and that demand. Basically, the LNG capacity under construction, it will be probably, I don't know, not quite 130 to 150, maybe more billion cubic meters, more than the market can handle. And according to the IEA, it will likely stay in an oversupplied state right out to 2040. That's the step scenario. Now, that's sort of their, business as usual, but still the most bullish statement for any oil and gas modeling. Take a look now at the middle line on that graph, the APS scenario. Look at how low it is. It's probably down about 300 billion cubic meters. So we're going to be building out from the current 600 billion cubic meters of demand up to 900 billion cubic meters of liquefaction capacity. And for a market that in 25 years could very easily be 1/3 of that. That's the problem here, is that both the industry and the governments, and particularly we're talking about BC government, supported strongly by the Alberta government, and then the federal government, which is all over LNG. Minister Tim Hodgson, the natural resources minister, essentially the energy minister, has said nothing but bullish. He's a big bull on LNG, but they're looking at only the rosiest modeling scenarios. They're not taking into account the APS scenario. Now, I've talked to energy economists like Chris Bataille, and I've talked to analysts like, Kingsmill Bond from Ember Energy, and plenty of them think that the APS scenario is the most likely, far more likely than steps. And I would have to say, based on the work that I've done and the many modeling reports I've read and data that I've read, I agree. I think the APS scenario is the most likely as well. What I'm pretty confident about is that the step scenario is not realistic whatsoever. So even if we don't get, if even if consumption of LNG doesn't drop as low as the APS scenario, but somewhere in between, that's still not very, that's not very much consumption. Consumption would fall dramatically after the early 2030s. So here we are in Canada anticipating that, projects of national interest will include LNG. We've already saw phase two of the LNG Canada included in the first 5 projects that were announced last week. And here we are, we're looking at adding more and more and more, possibly into an incredibly oversupplied market. Will that lead to stranded assets? What will be the exposure for taxpayers? Who will clean up stranded assets? How much infrastructure are we building? And I'm talking about transmission lines, for example. How much infrastructure are we building to serve those plants that then would become redundant? Do we get taxpayer gets stuck with the bill? Probably. This is a lot more complex and a lot riskier than what the LNG bulls like Hodgson and BC Energy Minister Adrian Dix would lead you to believe. I mean, this is the IEA modeling, and it's not like they're they're not that pessimistic or anti-LNG. This is credible modeling, is my point. Now, in fairness to the BC government, I emailed Adrian Dix's office and I asked some questions, and they were very kind enough to reply, and they made the point that and I'll read the part of the email for you. There remains a strong market demand for LNG from BC. Each of the projects currently under construction and operating have the majority of their LNG already contracted over long periods of time. And that's right. I mean, if you're developing an LNG project, what you do is you get offtake agreements, basically sales contracts, maybe 15, 20 years out. And then maybe you need 60% of it, let's say, then you can go to the bank or investors and you can finance the rest of it, and then you can arrange contracts when you're further along in construction or you've got it built. So fair enough, but we have one big one. We have another big one in Cedar that looks like I think it got environmental approval, a certificate from the BC government last week. And then we've got some smaller ones that would be, much easier, I would assume, to find offtake agreements. All of that is fine. And we also should point out that BC has some, BC projects have some competitive advantages. So I'll give you 3. While the capital expenditures, the cost to build these things are high, the lower operating costs because cool climate lowers the operating costs in liquefaction. I mean, you're chilling this gas so you can compress it and put it into a ship. So if you're down in Houston, where it gets pretty hot for a big part of the year, it takes more energy to do that. Costs are higher. Whereas if you're up in Kitimat on the northwest BC coast, it's a lot cooler. Your costs are lower. Another thing, shorter distance to Asian markets. That gives BC LNG a big leg up on, say, the American LNG plants, which have to go down through the Panama Canal and around. Lower emissions intensity. Now, this is not the same in the oil market. Global oil sells on price and grade. But in the LNG market, there appears to be, burgeoning demand for clean LNG, low emissions LNG. And BC has got, thanks to its hydropower, it's already electrified a lot of the gas production up in northeast BC. And it's an open question as to how much of the liquefaction on the coast will be electrified because the infrastructure isn't there. And but the assumption is that it will be there and they will be electrified. And that means low emissions intensity LNG, which gives it a competitive edge in a maybe a soft market or even a declining market. How much of an edge we don't know yet. We'll have to see. I mean, there's some risk involved here. So my point here is just wrap it all up. My point here is that the if you instead of looking at it like an OPEC or ExxonMobil or one of these very bullish modelers, you take a look at the International Energy Agency, which is middle ground, and there's going to be a big glut of LNG capacity coming onto the market in just a couple of years. And it could last all the way out to 2040. And, we talk about this all the time here. If China succeeds in driving electrification of the global economy, then that would also reduce the consumption of gas, particularly in Asia, which is where BC intends to sell most of its LNG. This is risky business, folks, but it also demands more detail. And so we're going to try to dig that out for you. The competitiveness of each one of the projects that's either under construction or looks like it might come to be constructed, like Cedar, and some of the other issues that surround BC LNG. So watch for that in the future.